Bitcoin was showing tremendous signs of strength for a few days, but now is once again struggling at resistance and taking altcoins down with it, which seemed to be in a one-day alt season and now are struggling once again. That said, we'll take a look at the Bitcoin chart, see if we can figure out what's coming next, and also take a look at all the news driving markets today. Let's go. What is up, everybody? I'm Scott Melker, also known as the Wolf of All Streets. Before we get started, please subscribe to the channel. Go ahead and hit, smash, tap, touch, whatever you like to do, that like button right down below. Now, as I said, Bitcoin is once again struggling after a few days of strength, but that does not mean that it's heading way back down. Let's take a very quick look at the charts and see if we can figure out what's going on. Then we will review all of the news driving markets. First, we have this monthly channel. Price has been in since 2013 here on the monthly chart. As I've shown before, it's a perfect channel, basically up, down, March of 2020, back up, breaking resistance, and now retesting that EQ as support, that dashed line. That's the 50% level of that ascending channel. The monthly candle closes today. We're looking for that to hold this area potentially, which would be a signal for much higher targets at the top of the channel. If you hold the EQ of the channel, you expect price to head back up to the top. That's how people start talking about these large six-figure targets. When you zoom out, things look very, very good. And we have a potential monthly hammer here, almost with tweezer bottoms, although they're a bit separated. I just want to take a very quick look here at the daily. Not much happening. As you can see, we broke the EQ of this descending blue channel. Now we have a potentially bearish engulfing candle of yesterday's price action. Certainly not ideal, but we want to see the top half of this channel hold. We know that there's strong resistance around 36K and the descending 50 MA right there. Looking at the trading range here on the daily chart, you can see that price was rejected exactly at the EQ after wicking above. It closed some 4-hour candles up there, but the daily was not able to break above that 36,000 level. And now we're seeing the result of that, a drop back down, retracing that entire candle. Hopefully, because of this little candle here and the price action in this area, this will be a good area to bounce, but hard to know for now. Looking at that same channel on the 4-hour, which is where we've generally looked at it, you can see it did give us some hope, broke above. That's when we saw some altcoins starting to break out. I even did a video yesterday with some potentially decent looking setups that have not played out thus far. And now we are dropping once again. But this whole area here, all of this price action should theoretically be acting as support, although that could have already happened with those candles. If not, you'll be looking down here off this candle around 33,000 for support if this drops further, and then hopefully head back up. But hard to know what's happening. This is a pretty square rejection. But once again, all of this is happening on extremely minimum volume. Very, very boring. Let's dive into the news now. Now, this is a big story. We've had a huge advocate in Senator Cynthia Lummis for a very long time from Wyoming, who always is talking about Bitcoin, but she went on CNBC and said that Bitcoin was an ideal retirement asset because the Fed will continue to print money, which only means that the dollar can be devalued. We can watch that right here.
I encourage people to buy and hold. I encourage them to say Bitcoin for their retirement, for their future. And that's because as the Congress spends trillions and trillions of dollars and is flooding our economy and the world economy with US dollars, there's no way that we cannot debase the value of the US dollars.
Now, as she said, she views Bitcoin as a retirement asset. I have often said that dollars are for spending and Bitcoin is for saving. You cannot save dollars. Michael Saylor has shown everybody that that's the case, talking about the real numbers of inflation and the decreasing value of your dollar versus hard assets and goods. We've seen even with CPI that May over May inflation rates went up 5% in the last year, and we know that real inflation is much, much higher. I agree 100% that you should be accumulating Bitcoin now, regardless of the price, dollar cost averaging, buying the dips, and doing it for your future, for your children, for your grandchildren. When you zoom out and stop viewing it as a get-rich-quick scheme, you all of a sudden see how powerful of an asset it is, and it's probably going to be the best asset you can possibly save for your retirement. Now, in this next clip, she talks about how she bought 5 Bitcoins in 2013 for $300 each.
I buy Bitcoin and I hold Bitcoin.
You buy Bitcoin?
Oh, yes.
You have Bitcoin?
I do.
How much Bitcoin do you have?
Well, I only have, I think, 5 Bitcoin.
So only 5 Bitcoin, but she bought them in 2013 for about $300 each. So she can now add a couple of zeros to that number.
How many of us are jealous that we did not buy Bitcoin for $300 back then? And it would be amazing to see her continuing to buy, which she says that she is. She's putting her money where her mouth is, but most importantly, she is a United States senator sitting in a position of power on the finance committee and could actually impact smart legislation and regulation around Bitcoin. Let's hope. In the next story, Coinbase reveals plans for crypto app store amid global refocus. Coinbase is looking to bolster its global presence and now it will focus on launching new products in most countries by default moving forward, including a crypto app store. This is interesting. They're taking the Apple model, saying Apple didn't attempt to build every app for the iPhone. It empowered developers and gave mobile users an easy way to access new, innovative apps. We need to do the same in crypto. I absolutely agree. Coinbase is going to be an even bigger company and a more important company in the future, regardless of what you think of them, and them opening to more D apps and developers only will expand their market share and also will benefit crypto across the board. So this is really great news. And another product, Coinbase debuts savings product with 4% APY and USDC deposits. The crypto exchange is touting far higher yields than what traditional savings accounts can offer. Now this is really interesting because we know that platforms like Voyager and Celsius and Nexo and BlockFi and Amber offer huge yields up to 10% or more on USDC and stablecoins. They're only offering 4% at Coinbase, but I think that's actually really smart because they're going for a mainstream customer, someone who's used to putting money in a bank account, does not really understand crypto, maybe who doesn't even want to buy Bitcoin, but will understand that holding dollars or a stablecoin pegged to the dollar can gain them yield. Offering 10% to many people who have been getting 0% feels like it can't be real, too good to be true, or some sort of scam. We hear it all the time. But offering 4% is probably a comfortable number that will compel a lot of mainstream people who have no interest in crypto to come in, hold their money on Coinbase. I've made the argument of late many times. We used to think that Bitcoin was sort of the gateway drug into crypto. People would buy Bitcoin, then they would go down the rabbit hole, Ethereum and other coins. I've made the argument in my experience, and a lot of my normal friends who would not buy Bitcoin will absolutely buy USDC, park it on one of these platforms and earn yield because that's something they understand. I think that stablecoins and yield are the gateway drug into crypto, so it's good to see that Coinbase, even though it's only 4%, will be offering this. Beijing enables China's digital yuan payments for subways. You can see very quickly here that China is going all in, but slowly, on the digital yuan, their central bank digital currency. The future of their money is digital. The future of their citizens' privacy is non-existent, but everybody knew that. A central bank digital currency is a wet dream for China. They can control and see every single transaction and have perfect control of the money supply. Really scary stuff here when you dig into it. Not good for the Chinese citizens and probably related to the wide crackdown on Bitcoin and cryptocurrencies. One more story, USDC stablecoin could soon expand to 10 more blockchains. A stablecoin with a market cap of $25 billion is currently on 4 networks. These are the chains that it could potentially be expanding to. A lot of our favorites, Avalanche, Celo, Flow, Hedera, Kava, Nervos, Polkadot, Stacks, Tezos, and Tron. Like I said, stablecoins may be the gateway drug, and they are superior to other cryptocurrencies, as we know, for settlements and for payments. You can send a stablecoin in a small amount to anyone in the world for a minimal fee. It's absolutely an incredible innovation in the crypto space, and nice to see USDC, which is highly regulated and is viewed as very safe, expanding to other blockchains. And finally, Bitcoin's hash rate has fallen 50% from its peak in May. We know that this is largely a result of crypto prices dropping and more of the China crackdown on mining. This hash rate will return, prices will go back up, but it's definitely always worth watching that these on-chain metrics like hash rate have continued to drop to levels we haven't seen really in years. Keep an eye on the on-chain metrics and the hash rate. Guys, that is it. Peace.